Been pushing out updates to all the indicators. Been reading quite a lot of research. To be frank, we're going to be doing a macro plan show probably after this stream, where I'm going to be breaking down and going over all the macro outlooks that are getting sent to me over the last 2 or 3 days. Frankly, there's a lot to go over. I'm just going through the research I've been sent so far. I get sent like 100 emails a day now at this point. I get sent so much stuff. But anybody who knows me knows how much I talk about, oh man, I get sent so many damn emails. But it's part of the work that actually goes into making sure you're knowledgeable about the things that you're trading and the future expectations of the big players who are willing to tell you exactly what they're thinking if you're just willing to listen. So with that in mind, just still going through a couple of emails. Let's see here. Danske Bank, weekly focus, hawkish surprise. Let's see here. U.S. Department of Treasury summit for a new global financing pact. Oh, remarks by Secretary Yellen at high-level panel at a summit for the new global financing pact. Okay. That might be something important to read later on, because I need to know what those things are. All right, got that. Now, finally, if I could, real quick, let me switch over my... Here we go. All right, so yesterday I pretty much only covered these 4 charts. I covered the dollar, I covered Bitcoin, I covered NASDAQ and the ES, and I covered oil. Now we're going here into the end of the day. We've had a bit of a rally here in the AM period where I'm at. You see, this is like midnight, 1 a.m. This is when we had, if I go to the economic calendar here, a surprise drop out of all of the European PMIs. So look at this. German manufacturing PMI forecasted 43, came out as 41. The services were forecasted 56, came out 45. And overall net for the Euro area, the Eurozone, composite was 52 forecast, came out 50. Now it's like right on the cusp of just flipping into contractionary territory. And then the manufacturing and the services both got hit, with the services actually getting hit more, I think. Let's see here. That's okay. And yeah, it looks like it got hit more. So services, if this is now the time when services are rotating, hopefully you guys understand the importance of that. I'm going to go ahead, double check what's going on here on the Streamio. Everything's fine. Good. A big part of the recession jinx video is if your services turn over. I don't know if I mentioned that in the video or not, but a big part of actually getting a recession when everyone's anticipating that there won't be, a big component of that is services begin to actually turn over, because services have been one of the main things keeping growth and inflation high in many countries. The service sector of the economy, if you look at the CPIs and these PMIs and PPIs and PCEs, if you look at any major macroeconomic measure, it looks like that the service side of the economy has been what's been holding strength and keeping central bankers on a warpath, to say the least, to continue their hikes. So with that in mind, let's continue looking at some of these charts. Here we have the dollar. So on the news, oh man, the French services PMI is now contracting. Wow. Yeah, all these PMIs are horrible, horrible, horrible. What's interesting is actually the UK PMIs held up the best. They had the least negative decline. You know, for all the flack that the UK is getting in the finance community about like how horrid the inflation is over there, they're holding up. You know, Great Britain is holding up like it does. You know, they got a history of holding up. Anyways, let's see here, and then the US PMIs came out, and the US PMIs, the manufacturing got hit, the services didn't get hit at all. Wow. So this is what a lot of analysts anticipated. These are just the glasses. What analysts had anticipated, and what I anticipate, especially if you're listening to any people give commentary on the US dollar, the DXY index that we're looking at here, is specifically that the United States, the growth and the performance of just all the businesses in the United States is expected to outperform the rest of the world. So on a relative basis, you end up with a stronger dollar. You end up on, I believe, the right side or the left side of the dollar smile. You end up at one of the extremes of the dollar smile. Real quick, if I could bring up an image for you guys to real quick visualize. All right, copy image, paste. So this is what I mean by the dollar smile. Let's see here. So I believe if you're gonna anticipate a recession, you're over here. But I think we're more or less going to be on this side. Look, if you have a full-on horrible, horrible recession, we're going to be on this left side here. But even if there's like a silent recession, which is just underlying long-term slowdown, you know, instead of a fall-off right away that causes a recession, like, for example, of COVID or the Great Financial Crisis. I mean, GFC was over several months. But what I mean is even a longer-term slowdown where your recession is given to you in drips and drops over a long period of time, like a year and a half. You end up on the right side here just because in that sort of situation, the United States would still be outperforming the rest of the world. It would slow down less, and, well, because the rest of the world is slowing down in its production, you're going to end up with less energy use. And with less energy use, it's going to make all these commodities insanely cheap, energy commodities like oil. So you're going to end up with a lot of people being able to easily afford their energy, but they're not willing to spend it. So there's going to be less foreign investment. There's going to be less investment in emerging market economies and high growth economies into ones that provide steady yield. And the countries that provide steady yield are in Europe and the United States. And don't get me wrong, there's definitely places you can go for yield. It's just a matter of, well, if you take on yield risk in those countries, you also have to assume their currency risk. And if their currency is falling relative to the dollar, does the growth in their yield that you've paid for actually make up for that loss? Because that's actually somewhat of a similar situation as to the reason why SVB and Signature, why all those banks a few months ago went under. Exactly that sort of situation. The price of their bonds fell so quickly, where if they were able to hold those bonds to duration, everything would have been fine, right? They just didn't have enough cash on hand to actually pay people off. So yeah, liquidity issues are a bummer, yeah, and that's not really the best way you want to put it. It's a little bigger than a bummer. Now, if you are anticipating a recession, just straight up, it's on the left side here. And this is the dollar smile phenomenon. So generally when the rest of the world is growing and it's a very risk-on environment, you go short the dollar. And more longer-term thinking, by the way, I think in yesterday's stream I mentioned some outlook I read that was talking about from EPB Research. They posted a video talking about how long-term debt and demographics are going to slow down growth around the entire world for probably 2 generations out into the future. So our kid, my generation's kids and their kids, if the demographics, the birth rate isn't increased enough, and because right now we're kind of resolving our demographic problems through immigration around all these developed countries, at some point that's not going to work either. So either birth rates need to go back higher, or you're going to end up with this like demographic downshift. All these people saying, oh, China's population is going to fall off like a tank after the 2040s or 2050s, right? The Zions, right? He says that, Peter Zion. But there's all sorts of different groups that do that kind of demographic analysis, and they say, it's not going to be great for the world. And in that sort of situation, you would probably still end up with a dollar smile scenario where, probably because the United States has some of the better standards of living and jobs and, well, a lot of power around the world, it's probably going to end up still pulling relatively more of the skilled working population of the world into the country, where other countries are going to have to fight tooth and nail for those people to come to their country instead of going to the United States, right? And that's the demographic advantage. So even if the United States falls demographically with the rest of the world, they still have like the creme de la creme of people. So long that the United States can, be an attractive country where that's true and that's the case, then this dollar smile situation where the United States dollar will continue to appreciate as demographics fall will still be the case. As for what happened today, it's just the PMIs. The PMIs for Europe were terrible. The PMIs for the United States came in just fine, effectively flat. The U.S. service sector grew. Technically, it came in above forecast. It technically came down, right? The last print was 54.9. This print is 54.1. But the forecast was 54, so it's like, it's a minor beat, but it's not. It's effectively the actual price came in as forecasted, effectively. Whereas all of these European countries had definite, below actual than forecast prints on their PMIs. So going into next week, got some central bank information coming out. LEI for Japan, confidence. Business confidence expected to fall. I wonder if that's also going to surprise to the downside. Let's see here. So that's on the 26th. That's right here on the Monday. I'm still kind of skeptical when it comes down to this rally that we've had against the dollar, right? With the dollar going down, down, down. You can see my arrows saying up, up, up. I started getting correct roughly around here, right? This so far has been okay. At this point, I'm second guessing myself. But over, this was ECB right around here. This was ECB. I'm like, man. But even towards ECB, there are videos of me still on these days saying, I'm not buying this story that the dollar is going to get weaker from here. I'm not buying this story just because I was hawkish going into FOMC and ECB. I was thinking the Fed was going to hike, right? But now they didn't hike, but they came out with more hawkish than expected forward guidance, saying, we'll probably hike 50 more basis points. And now as more data has come out over these last 2 days, this entire reversal, effectively what I was anticipating to occur, like this whole span of time right here, this whole drawdown, I didn't even think that this was going to happen. I thought we'd be at this price and time over here. I thought we'd be up here, right? But the Fed wasn't hawkish enough, so that didn't happen. And that gave me some excellent trading opportunities around here. So I'm sitting nice and snug, I'm doing pretty all right. I was in drawdown up until PMI came out. So I'm very very happy that I've stuck to my guns and that I didn't just let 1 or 2 trading days go against me, and then I really knew what I was doing. So yeah, while this, I think what was it? Was this? No, this was ECB, right? This was ECB. My bad. Okay, so sorry, I got myself a little mixed up in my timing. But yeah, this was ECB, this fall off here. And now we're pretty much back at where we were for ECB. And this isn't like this. I'm not drawing TA lines here. This was my forecast for the month. Let's see here if I could real quick. This was my forecast for the month, is that we'd go up and then we'd come down, right? Looks like I need to adjust this real quick. Let's go ahead and increase the number of simulations here. Make it a little more accurate. There we go. So my baseline expectation is, and I drew this, what's this? 0616, we're now at 0623. So I have the expectation, so this was my expectation, 7 trading days ago, a week ago, that we'd have this bounce going into the end of the month. And I had this expectation that we'd fall to roughly around this area. Back here, on the 29th of May, like almost a month ago. So when it comes down to at least my expectations for the dollar, the only thing I was really kind of wrong on was I was expecting maybe more upside at the beginning of this month and then the fall down, but at least in this area right here where I was expecting the rotation from moving up to moving down, I was right on that expectation for when we were actually rotating lower. And now we're in this area where I think we could just end the month on many different assets just going sideways. Unless the economic data continues just to pummel the rest of the world, then I really don't see a reason why we need to do a total reversal on the dollar index in the last week here, right? We could still close maybe just below the, effectively head back to like the 103.50 price range and end the month around there. But my neutral expectation is that we just end this month going sideways, and I'll have to wait until some macro data actually comes out to either support or deny further volatile moves going into the next week. I'm going to be reading some outlooks sometime later today in a separate stream, probably just for people in the trading group, a macro plan stream for everyone in the trading group. So if you want to join the group where I do all my trades, and by the way, when you join the group, you get access to all these indicators. It's $100 a month, pretty damn affordable compared to most other trading groups. You just go down to the WAP link down below in the description and sign up to the Boss Trading Group. And then you'll get access to all the private channels, a channel for all my trades, a channel with, just trading group trade plans, and a channel where you can come in and hang out and chat with other guys who are in the trading group. And then I can do one-on-ones with you, show you how to do all the interpretations for this stuff. People learn how to trade this stuff super quickly, man. Super, super quickly. Yeah. So I think I did pretty well for this month. One of the reasons why, and one of the things I like to show off here is, well, my model for pivot probabilities, a probability-based indicator for the pivot points, forecasted the exact low for this month. And don't get me wrong, it doesn't forecast 100% accurately. It's just, it hits these price levels, and these price levels have pretty good expected value compared to a lot of other signals. And the other thing is, when you look at this shape and these probabilities on the right-hand side, you can clearly see, like, oh, if we start going below this S1.5 monthly pivot, we're probably going to see a move down to S3, because this is the next most likely area where the next highest level of probabilities are. So don't get me wrong, there's definitely some play in the expectations, but the play that I'm talking about, which is effectively the price range that you execute trades at, you could say the ranges are determined based off your pivot points. So this particular month, if we had gone and traded down here, I would have had a lot of uncertainty, because the range here between this S1.5 and S1 pivot is like 200, like 120, 150 pips. It's not even, it's way too big. It's way too big to have a huge degree of certainty in such a small probability. Whereas this thing says 30, and this is roughly a 50, 70 pip price range. This is a lot more doable, a lot more reasonable. And I've been going long this whole thing right here, with using weekly pivot probabilities. If I could, down here to the downside, and this is probably another thing. I don't show all of the pivot probability statistics or the range probability statistics on weekly and monthly bases, because, well, that's really where the best trade plans are, and I do those trade plans with people in the trading group on the Saturday trading group streams. So if you're in the trading group this Saturday, there's going to be a 1-hour stream where I do trade plans for pretty much every single asset here. I mean, you can literally just look at charts once a week, do your trade plan, and then throughout the week just watch and see if the asset actually moves according to your nominal expectations based off these probabilities. Otherwise, and spend the rest of your time just actually reading outlooks and expert opinions, looking at market sentiment, looking at different models from other traders who are much smarter than you, right? And also listening to the trading expectations and the outlooks of people who have 20, 30 years of experience, who are at, places like Merrill Lynch, B of A, Merrill, or Westpac, or Wells Fargo, Chase, or Barclays. Just, if you read what these people have to say, they'll tell you what's on their minds and what they think is pertinent to market conditions right now and what to pay attention to. And more importantly, the reason why I always recommend reading those things is that they tell you why they think those things, so you can learn to, over time, as you read more and more and more of their material, build up knowledge base to sort of simulate or emulate what they're doing, right? Don't get me wrong, if you're not going out and getting 6 years of college education and working at all these trading firms and banks, you're not going to have the same level of knowledge or experience or diligence as these guys got. But at a minimum, you'll at least know what they're thinking and know what they're looking at and why they're doing it. Because in and of themselves, writing these outlooks is a really great learning experience. It certainly helped me tremendously. So with that little rant out of the way, you can see, most of the time your low for this week comes in right around here. Once you move past this S1 pivot, your probabilities for where the low of this week occur start to get very thin and spread out across a wide range. So it's hard to predict where your low is going to come in, and that's like 120 point range here on the DXY. So yeah, most of the time your low comes in roughly around here on the week, and most of the time your low comes around here on the month. So you have some kind of multi-time frame confluence going on there. Combine that with your outlooks and future market expectations, and having solid reasons for those expectations. Like, for example, one of the things that I read from Seb, I believe a Swedish group, they cover the Nordic countries very frequently. Seb, they publish an FX positioning document. It's like 10 or 12 pages, and they cover their interpretation of CFTC positioning. And they have all sorts of different indicators to measure and quantify, okay, this is where positioning is high, this is where positioning is low, here's some rate of changes, here's how things have been moderately changing. And then they go ahead and they apply their expert interpretations. So I've learned to interpret CFTC data from them because I found, through reading many different outlooks over long periods of time and getting familiar with how people write their outlooks and what are the methodologies and cases for how these guys do their interpretations, that Seb has some of the best CFTC market interpretations around. So when they say they see that US dollar positioning is starting to strengthen, I take note of that. And when I'm subscribed to some more proprietary research letters and they all tell me we're still going to be going short the euro dollar, hold on, I gotta sneeze. And the DXY, and the DXY is made up 40-60% of euro dollar price movement, effectively. Well, it doesn't make me especially bearish on the DXY. So you can see how putting all those things together, how that starts to make sense, right? Let me go ahead and check this out. Hey, Saya Ahmed. Let's see here. Well, if you just got in, let me go ahead and do a quick little refresh. Make sure you connect your WAP and Discord accounts together. So then you get access to the private trading group. Yeah, it looks like no, you're in the group. You're in the group. You just gotta look in the Discord. I mean, real quick. I know it's like a little bit of tech support here, but well, just send me a message, and we'll work it out. If you don't have access to the trading group, but I know you. I know you. Actually, it looks like maybe there's a different Discord account connected to. Yeah, maybe. Yeah, it looks like there's maybe a different Discord account connected. We'll see. Oh, unless you're talking about Wayne's Pivots Pro, right? I'm talking about the trading group, the $100 a month thing. It's all good. It's all good. But if you're talking about Wayne's Pivots Pro, right? There's a private channel just for people who own Wayne's Pivots Pro to talk about strategy and to discuss different trading opportunities and how they're biasing their pivots over the next week and the next month. There's a lot of people. There's like 100 people in that channel. There's a lot of people in there. Yeah, and the other thing is that with this Wayne's Pivots Pro, there's now so much stuff in here. There's so many strategies now in this. Like, for example, the central pivot range settings. A lot of people who follow Pivot Boss, if you know who Pivot Boss is, he wrote a book summarizing some strategy around the central pivot zone. So you have like a top pivot and a bottom pivot. So I went ahead and I just threw that in there. And I put like customization settings in there so you can control all the individual pivots, right? I think the settings for these pivots, right? Yeah. So someone was asking like a day or two ago, how do you control the style settings for these BC and TC, top central and bottom central pivot? They're right here, right under this whole individual pivot level settings. So yeah, there's that. I'll probably have to add one or two more extra style settings, so then you can like change these from dashed or dollar to solid lines. Yeah, stuff like that. Extra customization is always welcome. Always welcome. So yeah, I mean, don't worry if you need help with strategy or any of this sort of stuff. And by the way, this is for everyone who has Wayne's Pivots Pro. If you would like some help with learning how to use some more of the features of the indicator, you can go ahead and hit me up. Understand that a lot of people ask me for a tutorial. There's technically a tutorial already built into the indicator, right? See these little eye bubbles when you hover your mouse over them? Like these little tooltips show up. These explain every single setting. So if you wanted to know about ATR, there's ATR. The Fibonacci pivot settings are kind of self-explanatory. Here's the central pivot range. So if you wanted to know, like, and then here's all the pivot conditions, tells you exactly what condition activates all these things, the resistance and support skew, all this stuff. There's a little tooltip bubble for it. So if you just need help on a setting, check out the tooltip. Otherwise, feel free to ask me. So yeah, that is the dollar. Things are going in the direction that I've wanted the dollar to go in now for a week. And thankfully, I didn't change my bias. I did save myself a big headache on ECB day with here on USD CAD. Now that we're here, you can see my forecast probably needed to be reversed. I needed to do an up first, and then a down, and then an up, right? Because we still went high, and then we went down here to the forecasted low. And now we're probably just going to end the week like this. I mean, we only got about 20 minutes left in the trading day. So let's go ahead and real quick, I'm going to check out Eurodollar, see how the yield spreads look on this on the daily. We also hit the target for the week on the downside. Looks like the bullish yield spread has now gone away. We're now looks like flat on the yield spread. Yeah, the long-term yield spreads are quite negative. I would not be surprised if the next week was bearish, if these yield spreads continue just to get more and more negative. That is not great. Yeah, these yield spreads could end up putting a lot of pressure. Like, how much pressure? Probably this much. Let me do a little TA. Down here, whatever, right? More specifically, I genuinely don't see it. But going all the way down here in like the last week, it's technically possible. It's technically possible, right? But then again, if you know my indicators, like look at that recession jinx video. It's explicitly based on the condition that you continue to get bad moves, right? These are probabilities that we're dealing with. These are not absolute 100% certainties. So we have to look at this indicator and understand, like, oh, there's a significant number of probabilities where the low for the month occurs. So we need to always be aware of the risk of going down here, even when we're all the way up here, for God knows what reason, right? Same thing with the high, the top side pivots, right? I mentioned yesterday we hit the probability weighted pivot high right around here. I'm like, this is like excellent. It tapped it right here. We broke through it and rejected off of it right here. Like, yeah, I'm expecting that we will at least end this month below this R1 monthly pivot. And I can bring up range probabilities, another measure for our probability risk. And this says, 95% of the time, the close for this month on Eurodollar is below the price of 109.645, which is just below the R1 monthly pivot. Let's look at Aussie. Oh, man. Wow. Look at that. What a... Yeah, man. I should have gone short this after ECB. I was just afraid it would go to these highs. Here's something that I'm curious about, though. Oh, yeah, man. Look at that. Once you go past here, it's just tail. Yeah. Let's check out the closing odds. Whoa, yeah, this thing still has quite a bit more room to go. Also, I'm going to turn off these central pivot range settings. Yeah, there's like I would anticipate that things start to slow down, the volatility, that is. I expect these candles to start to get smaller going into the trading week ahead of us. Real quick, I want to check this out. Oh, wow, yeah, most of your tops for this week. I'm pretty certain that's why I said we go down and then up. And however, the up was probably because most of your lows are around here, right? Yep, check that out. Most of your lows are around this probability weighted pivot. And then once you start crossing this S1, right? If I hide the bars real quick, So you see how most of the time you get your low. What's that? 62% of the time your low for this week is between S0.5 and S1.5. Well, you can say, hey, if we start to deviate from this expectation that the low is somewhere around here, if we start to deviate from it, at what price would I think is a critical price where I'd need to change my opinion that the low is likely to be around here? And that would probably be this S1.5 pivot, because once you cross this S1.5, now you're dealing with getting your low probably somewhere around here. And that's like an 80 pip range, and then, heaven forbid you don't go past this S2.5 pivot, because it's something like in the last 20 years we've never gone past this pivot for this specific week. So with that in mind, real quick, going to be looking at these low odds here. Another way you could have thresholded is with these range probabilities, and just saying like, hey, either you're getting your low right here or maybe roughly right here, otherwise you're just dealing with high degrees of uncertainty as to where your low is going to come in. Yeah, see, now it's regenerated the distribution. It's given you probably a more accurate set of probabilities here. Yeah, see, this is definitely a tail risk. So once you go past, yeah, this is saying once you start going past this S1 pivot, you're dealing with super thin odds, because you can see how the colors go from really, really bright green with the higher probabilities to the really, really dull green with the low probabilities. So you can pretty easily identify, okay, once you go past roughly this price, and this is one of the reasons why I still have the pivots on my chart, is to help with very quickly identifying price thresholds for, once we go past this price, we're starting to deal with falling knife situations, right? Let me go ahead and hide this. So yeah, past this, now you're dealing with falling knife situations, and definitely past here, it's kind of like, hey, this is kind of a confirmation that you're dealing with falling knife when you start trading around these odds here. Because in order to get to the S1.5, S2 pivot, you need an increase in volatility. It's very unlikely that you have lower volatility over the span of an entire period, and you end up closing at the S2 or the R2 pivot. Generally speaking, in order to close at these pivots, it's generally safe to assume that volatility is increasing. So if you have major economic events in the week ahead or the month ahead, it's important to take note of when those occur and what the trading expectations are for those trading events, so that then you can anticipate, hey, okay, this is a period in time when volatility could spike up significantly on a shift in expectations. Like, for example, what happened with the pound, they did 50 basis points. They were expected to maybe do 25, and then they did 50, and they've probably fallen the least. I was expecting a more bullish move because these yield spreads were way, way, way more aggressive, and now these yield spreads aren't. Well, this is also a 12-hour, so you can't really. FYI, the more reliable yield spreads are probably going to be here on your 1 hour. So with this in mind, it's like, yeah, yield spreads are still super positive. Dollar may continue to do well as this. I don't know. When it comes down to the rest of Europe, I think the pound is actually holding up fairly well. I don't know. If you wanted to do a whole pound short thing on its economy, maybe euro pound. But even look at this, right? It's just been, euro's just been going down to the left. And check that out. We hit the probability weighted pivot low for the month right here. What a fantastic buy that would have been. Yeah, this thing surprises me. It surprises me so often. But yeah, if you can put two and two together when it comes down to the reasons why you should be looking at certain currencies macroeconomically, and that's not a particularly difficult thing. Effectively, you're using macroeconomics as a filter for selection, right? It's like, hey, the economy in this country continues to improve while the economy in this other country continues to get worse. Let's go ahead and see what we can do with a pairs trade on that. And then there's always Japan, right? Japan just keeps getting crazier and crazier and crazier. I still would not be surprised to see the pound yen go to 185 this month. The thing is moving so far, so fast. Yeah, I mean, in a month it could be doing 1,000 pips. However, over like the span of this year, it's done 2,500 just so far. It's going to be a crazy, crazy, crazy ride down when the Bank of Japan starts tightening, folks. Oh my god. Yeah, they're just using this free money just to, help support their economy, their stock market, but man, it's going to be a bloodbath currency-wise when the Bank of Japan gets tight, because eventually the Bank of Japan is going to have to tighten up their belt. Eventually the Bank of Japan is going to have to tighten up their belt. They're not going to be able to stay accommodative and, let's go ahead and check out dollar yen real quick. Oh man, we're getting pretty close here to 145. And you can even see the yield spreads are starting to weaken. Yeah, I was just saying, maybe there's a pullback here and then you take it on up. I had sideways expectations here. I was thinking that maybe the Bank of Japan comes out with something, maybe. That's on the more hawkish side when they had a couple of meeting minutes come out, and maybe I thought there could be something in there, but nope. No hints, no nothing. Just weaker yen. And so I've just not been touching this. And in all seriousness, I would be going short yen in trades, absolutely. It's just I trade on Oanda, and Oanda gives you really crap leverage when it comes down to the yen. So there was a moment in time in like 2021 or something. I forget exactly what year, but there was a moment in time when they would give you insanely fantastic leverage on the yen. And I don't know what happened. I don't know what happened to that. I loved that. And I flipped to just trading yen pairs, and it was easy money, quote unquote, as easy money as trading goes. But when you have a trading strategy and you're reading outlooks, you're staying informed on what's actually moving markets, what future market expectations are, and you're going into every single week and every single month with a baseline trade plan that you can then be nimble and flexible around when new information comes in, right? You have a squawk open, you have financial juice open, and as new information comes out, you are able to say, oh, I wasn't expecting that, or, oh, that's more than what I was expecting, and then be able to react based off that completely and totally autonomously, because you understand what you're trading, you understand the implications of new information coming out, and how that's going to impact future trading expectations based off where they are right now. So, with all that said and done, I don't see too much here in the chat. Thank you, Ahmed, for watching. Can I look at US 30? Sure thing. I think Capital Markets or Capital.com is no longer going to be sharing charts, right? There was some notification I got that Capital.com was no longer participating. So this is just the Dow Jones 30. Let's see here. 8cap. I don't know. Let's see. Does 8cap load more historical data? It looks like 8cap's loading more historical data. There's your probability way to pivot for the week. Let's check it out for the month. Yeah, it's still down here, so this is a particularly bullish month. And yep, there you go. Now, don't get me wrong. Going into this area, you're probably taking only very small trades. Like these. And if you were especially bearish at the beginning of the month, you were getting your shorts in here and then probably trimming over these 3 trading days. You were probably trimming any shorts from over here. And then at this point, I don't know, maybe you were adding. But this was a particular month across so many different assets, and that was my email. It wasn't you guys. That was me. There's so many different assets this month that had risk-on moves during these particular 3 days around the ECB, right? And they've taken out so many people who were going short, right? And all the people who are getting long into this are about to get flushed out because the quote-unquote smart money isn't increasing their exposure. In fact, if the stock market continues to go up, people will be forced to add exposure. And the smartest of the smart money, as they see the stock market continuing to rise, going into worse macroeconomic conditions, the people who are stuck with a policy that they have to add into their portfolios at these prices are going to get totally owned. They're going to end up losing money because they'll be forced to add at higher and higher prices. And the managers who decide, hey, there's still significant risks here that I am not comfortable in taking because the outlook still, 1 to 3 months ahead is extremely sketchy. There is still a long-term, intermediate-term outlook here on a few months scale going into the end of the year. That's still not favorable for long-term positioning that I feel comfortable allocating my clients into. Like, that's the easiest way to talk about it and say, while it's all well and good that the S&P and the stock market and NASDAQ, that all these things are rising, it's only so few companies that are actually rising up. So, and I mean, that can be easily demonstrated with this index right here. So first off, here's the S&P. And you can see this is what I mean by you getting your tail risk, right? Going past this R2 pivot, see how like most of the time you top out around here in this zone between R1 and R2. Yeah, that happens most of the time, but then once you start going past this R2 pivot, you need to reassess the situation because now you're dealing with a different set of probabilities. See, this, where you top out here, this 26, this says, hey, roughly 26, 27% of the time, you top out here. And this would be during times when you are especially bearish on the month of June. Like this is the probability regime. This area right here is where you're especially bearish. This over here is maybe where like, okay, maybe it's time to take profit as a bull, or I'm a more conservative bear. I like going short more conservatively, or we've moved up so much, let me go ahead and take some profits, right? That was also quite reasonable here. And then once we have this jump, even here in these 2-3 trading days, I know, because of the outlooks that I read, of so many different professional traders who are extraordinarily profitable, extraordinarily good, and way more experienced than I am, who were shorting on these trading days with a lot of money, like millions and billions of dollars. And you think they're crying right now? No, like maybe they're in a small drawdown, or maybe depending if they got in over here, they just got out of drawdown. But they had to hold that for like 5 or 6 days. So if you have a particular conviction, like, okay, this is getting pretty bad, yeah, sure, you need a point where you get the hell out. But when you're adding into situations like this, right? While I say, oh man, millions of dollars, these guys must have super high conviction. Their whole portfolio size is like in huge. So a few $1,000,000 spread over these 3 trading days is like nothing to them. They do that out of, oh man, I'm getting emails from the Department of Treasury right now, because they just released today's yields. Let's see here, real long-term yield rates. Yes, thank you very much. Let me go ahead and mute that. Thank you. So it's just a matter of, okay, the conviction was still there, a long-term macro expectation was there. There was maybe a few stocks moving higher. There's a lot of people saying over here, like, hey, it's probably a reasonable time to short Tesla. And you can see Tesla sputtered right there for a bit. Tesla's probably going to end up closing high, though. Then there's Nvidia. Nvidia actually did top out around here. Oh my god. Probably. Oh, that's yeah, that's interesting. No tail risk on Nvidia, huh? I mean, don't get me wrong. That was an insane jump, but it seems like Nvidia yeah. And by the way, this forecast that I made here, I made it on this day right there, on this green candle. So on the next day as this opened, it jumped up exactly to my forecast. I was like, oh, from here maybe we go up and then down, but it just went up immediately and then down immediately. So it, technically this is what actually happened, right? I was wrong on the timing, but as soon as those prices were hit, I'm like, oh my god. The time to execute this trade, I think, was going to take like a week or two. Has to happen like right now. And that's just an interesting thing when it comes down to using this particular indicator. There's no timing aspect on this indicator. It's just telling you price ranges and the probabilities for those price ranges over a larger period, like a month or a week. It's not necessarily telling you when in that month or when in that week you're anticipated to hit these ranges. That's where something like range probabilities can be particularly helpful. And, well, now that I have it up here, you can see on the ES future, the expected value, the seasonal expected value for effectively the rest of this month is quite negative for the ES. Now, the whole reason I even brought up all this stuff was to, bring up the correlation with like, okay, the portfolio managers probably don't want to invest into these indices because only such a few percentage of, assets are moving it, like Tesla and Nvidia. Well, here's an index, a proper weighted index of Apple, Microsoft, Amazon, Nvidia, Google, Berkshire Hathaway, Meta, Tesla, and then UNH, that last one. Get exactly what that is. But these, you can see the formula right here in the bottom right. They're all weighted according to the ES. And this also is effectively where, what is this? The top 7 in the NASDAQ. And so this is the top 10 by weight in the S&P. And 7 of those are here in the NASDAQ. if I go here, you can see if we're just looking at the top of the top assets that move and have the most weight in moving these indices, probability weighted pivot high, exactly. Exactly. And not only that, but it was on the days that these extraordinarily smart and professional traders that I respect were going into their shorts on the Thursday and the Friday of last week. And you know what? If they were taking out these trades on individual names, they probably would have done just fine, right? This, you know, there's your move lower. I don't know if Apple's actually going to hold on to this or not. Ooh, yeah, there's some closing probabilities up here if you're looking at a proper distribution. So yeah, there could be some positive drift here up to 190 on Apple. Yeah, some positive drift there on Apple. Let's actually go to here and see where the closing odds are. Is this gonna load? Huh. I wonder what's up with this. I don't know, maybe reduce the look back? Maybe it doesn't have enough historical data? Loop takes too long. I don't know. Sometimes reducing the look back helps, but I don't know why it's not displaying on this chart. Huh. That's too weird. Too weird. I wonder why it's not displaying. Well, I'm gonna have to look into that. Is it like all the way down here or something? Yeah. It's all the way down here for some reason. I wonder what that's about. Well, that's definitely a bug. Well, that's actually good for me to know that this affects custom indices that way. This should work on every chart. Don't know why that's bugging out. But then again, it works on... We just saw it work on Apple, Nvidia, and the ES. So I wonder why it's... yeah, see, works perfectly fine. So I wonder why it's breaking on indices. Custom indices, right? Like, see how this is like a custom formula? So I wonder why it's breaking on the custom formula. Uh-huh. And then here's the DAX. Little extra thing. Got close to that probability weighted pivot high. Check out the low. Low is probably somewhere around here, around the S1. I'm pretty good at this. However, you can see that the odds are relatively flat and spread out. No way of saying exactly where the low is going to end up. Yeah, it hasn't been a particularly fantastic trading period. Oh, look at that. The DAX topped on Thursday, Friday of last week when everyone wanted to start going short. I have a feeling this is going to be the intermediate top for maybe the next few months, maybe going into August, September. I don't know. We'll see. There's still a recession jinx here on the table. Yeah. Check that out. Let's see if we actually see this follow through here on my trade plan from yesterday. And today's already red, and we're deviating from this linear regression. If we get one more day, unless we effectively reverse this move and go back like to 15.4 tomorrow to get back into this linear trend, come Monday, if we're opening red on Monday and closing red on Monday, this linear trend is dead. And we're going to have to assume some sideways negative drift pullback going into the end of month. Alrighty, folks. I mean, maybe I should check out Bitcoin real quick. Yeah, we're still at the probability weighted pivot high here. We moved higher. I still think that there's room to go even higher, right? I said yesterday to 33K. Just want to be careful. You don't want to... I mean, look, if there are many people out there who say, don't short stocks. Don't try and short Bitcoin, because all you need is one very unpredictably volatile day to come in, and you're broke. So shorting Bitcoin is literally one of the worst things you could ever try, unless you got some very particular strategy or some very particular outlook, right? Maybe you're looking at the on-coin, the chain analysis, and you're coming up with expectations like, guys with big wallets are dumping, and exchanges are also dumping. So I don't know. I think Bitcoin's going to do pretty well, and it might do better than people anticipate going into the end of this year. Because remember, Bitcoin's fairly uncorrelated. Within 5 years, I wouldn't be surprised if Bitcoin was in the six-figure range within 5 years. But that's also a fairly conservative expectation, right? Because within 5 years, there'll probably be another couple of halvings, right? And that'll definitely keep the supply of Bitcoin low enough to make the price of Bitcoin deflationary enough to reach those six-figure levels. So, well, you know what? With all that said and done, I think I am good on the day. I want to thank you all for watching me for the hour here. And hopefully you learned a couple of things. Hopefully I've interested you in these indicators, and maybe you'll join the trading group, work with me one-on-one to learn how to interpret these indicators on your own, and yeah. I think that's gonna be that. So, I've been your boss, Drill Boss. This has been the daily plan for Plan to Profit. Tomorrow, for everyone in the trading group, there's going to be a private week ahead stream. So if you're in the trading group, remember to hop on for that. And I said earlier at the beginning of the stream that there would likely be a macro plan show. I'll likely do it today because I got a lot of outlooks I need to go through to prepare myself for the week ahead and for the trade plans I want to make going into tomorrow. So again, thanks for watching, and I'll see you guys sometime next week. Remember, Sunday through Friday, 4:30 Pacific, 7:30 Eastern. I know I haven't been on that schedule this week, but next week we're back on schedule. All right. See you guys Monday, and have a good weekend. Or rather, see you guys for Sunday Open and Monday